Afternoon.
And hello to everybody here in the audience. Thank you very much for being here and thank you for your patience. We are going to learn a couple of things in this session. Whether you're an investor on an individual level or an institutional level, it's very important to know the options we have out there. So I'm going to start by asking both Basil and Saeed about people on the individual level, because really, even if we're talking institutional investment, the decisions are made by people. So my question right at the beginning is, what do you think people need to realize about investing in cryptocurrency, maybe comparing it to something they know in today's world, that will make it easier for them to make the decision?
Great question. So I've run through this exercise with my wife, and she said to me, can you give me an example of how crypto is similar to a traditional asset? And I say the comparison or the contrast is with the stock market, with buying a share of a company. There are some cryptocurrencies, not all, which are linked to a company or a startup which is raising capital and giving you tokens or cryptocurrencies in return for your investment, which is similar to a share of a company. When a company issues a share, you invest in the company, you get a share, and then you get a dividend or part of the profits of the company. On the cryptocurrency side, the difference is that you're not getting dividends, rather you're getting the appreciation in the price of the cryptocurrency or the token. And there's several other examples, but I think that's the closest comparison that I can make.
So in your view, it's similar to, in a way, buying a stock or a share on the stock market and enjoying profits or losses depending on your investment. I'll have a follow-up question in a moment. Basil?
Thank you, everyone, for having me here. So the way I look at it is similar for both the institution and the individual when you're looking at constructing a portfolio of investments. At the end of the day, everyone has their own risk appetite, the way that they want to allocate their finances and hold their investments. And my view is that everyone needs to understand how much risk appetite they have and allocate accordingly. Crypto is definitely and should be a part of any healthy portfolio today.
Excellent. So the one thing that I think in following up is people tend to see there's a lot of different words being used and different choices. And by that I mean when you say shares, people understand it's the company, Amazon, Facebook, that's what I'm buying. But what should they be careful of and how can they be careful of it before actually going and putting money into something in crypto? Saeed, please.
Yeah, I think it's like any other kind of asset class or any other investment. I think it's extremely important that you at least understand the basics, at a basic level, what you're putting your money into. Cryptocurrency is no different than shares, than bonds, than commodities. If you don't understand what it is that's driving the market or the fundamentals of the market you're putting your money into, then you will come across a lot of problems and you probably more often than not lose your money. But if you do the research and analysis and the basic understanding and you have that, then you're in a better position than you would if you did not do so. So I think it's really important to understand at a basic level what you're putting yourself into. There's a lot of material out there online. There's a lot of big platforms that are operating on cryptocurrencies that you can study it through. But I think as a minimum, you just need to know what you're putting your money into.
And same question, Basil.
The most important thing when you're starting to understand a new investment is to do your homework. Always do your research. And there's a lot of different resources out there for you to help you understand what you're looking at and how to do it. For example, YouTube's definitely a good place to start. There's tons of good videos out there, educational content, and reading materials across the internet to allow you to understand and due diligence the investments you're looking at. And then once you're at a stage where you feel comfortable to actually dip your toes and start looking at these investments, start with a small amount. Sign up to a platform that you're comfortable with, that you feel good about. For example, some platforms are unregulated and I would say are definitely higher risk, and some platforms are regulated and require more of you but offer you more protection. For example, like the platform I run, Midchains. So it's a good place for you to kind of dip your toes, start, have the patience to learn a little bit, but always do your homework.
Excellent. And this brings us to a very important point, and specifically about the institutional investment side as well. You mentioned the word regulation, okay? And regulated versus unregulated. So a lot of people are fearful of crypto because of the feeling that they could be putting their money and they'll never see it again, right? What I would ask you is, from an institutional level, what do you provide as Midchains that makes them realize that it's regulated, number one? Number two, what has it taken for you to get there in terms of regulation?
It's a great question. So I'm going to start at the end of that. So it's taken us about 3 years to get our regulatory permissions to operate as a regulated business, both as a custodian, meaning that we can hold crypto on behalf of our clients, as well as a trading platform for people to be able to invest and trade their investments between other participants in the market. What it means to be regulated is to have a license that is issued from a regulatory body that is recognized globally. Like, for example, in Abu Dhabi, it's the Abu Dhabi Global Markets Free Zone, which effectively is a third party validating that the way we operate our business protects the investor, whether that investor is institutional or individual, at the highest possible standards. And that is the most important thing that we offer as a regulated venue.
Yeah, so you've had to go through years, not just months, in order to reach where you are at today.
Yes, and the key difference is that having this allows our clients effectively to be legally protected by the laws when they are investing with us. And that's a very important thing to note, because in unregulated venues, there are no laws to protect you.
Okay, and with regards to Saeed, I will ask, I understand with Sheesha Finance, you operate slightly differently. So can I ask you, in a Shark Tank style, in a minute or around that, if somebody came to you wanting to invest their money in crypto, what is it that you offer?
Yeah, so Sheesha Finance is a decentralized finance platform which gives everyday people globally, wherever they are, access to a diversified crypto portfolio. You probably would need to have a basic understanding of crypto, because in order to participate on our platform, you actually need to have cryptocurrency and convert it to our token and then stake our token on our platform. And that's the equivalent of an LP position in a normal fund. The difference being there's no minimum amount, there's no KYC, there's no AML, there's no performance fee, there's no management fees. Everything is done through smart contracts in a decentralized fashion. We have a professional team of researchers, an investment team that does all the research, analysis, due diligence before we as a fund invest in these projects or in a portfolio. And then by staking on our platform, you get access to that portfolio without, as an individual, having to go through all of that hard work and effort and time to get access to it.
So if I am to understand the difference, and this is, I think, part of the beauty of this whole cryptocurrency and blockchain world, is there are different ways that people can get exposure. And by exposure, I mean they can invest in crypto. With Sheesha Finance, it's more on an individual level, whether it's somebody looking for an investment or somebody looking for diversification. They can come to you, and what they're getting are well-researched startup, and the word is ICO, which is initial coin offering, or startup projects in the crypto space, and they can enjoy the rise in value of that. So that's what they get with you. But I understand the difference with you is, Basil, on Midchains, institutions can actually use your platform to invest in a limited number, but extremely well-researched and vetted projects, effectively, which are, a lot of people understand, coins is the word that a lot of people understand in public, but they are, at the end of the day, a project trying to create something on the blockchain. Does that define it well?
Yeah, I'd say it defines it pretty well. I think beyond that, I would also say it's more about the execution of the financial markets. What we are, we're not a fund. We don't manage investments on behalf of anyone. What we are is an execution venue. You come to make your investments, you need somewhere to do it. We are that place to do it for you and to hold them on your behalf, similar to a stock exchange or a bank in that perspective.
Okay. At the beginning, I asked, what do people need to understand about crypto? What I'd love to ask both of you is, what do you think regulators, especially regulators in this city, Abu Dhabi, should understand better, or you wish they would understand better about this new technology? And I would love to add that it is a technology first and currency second. So what do you think they should understand to make the journey easier to become a hub globally for this kind of investment?
Yeah, great question. I think the regulator, like anybody else who wants to be involved in this market, they need to understand the principles and the fundamentals of what is happening in the market. So I believe they also need to do a lot of research. They need to speak to people who have been in this market for a long time to get an understanding so that they can actually make a judgment on what is actually protecting a consumer or not. So I can tell you that a couple of weeks ago, I sat down with somebody from the ADGM, and they were exploring, maybe issuing a license around decentralized finance. So I had to explain from the beginning of how I got involved in decentralized finance, what it is, what it's about, and how maybe they can regulate it or issue a license around it. So I think they need to get educated, they need to speak to the industry players, and they need to have an open mind as well. But then when it comes to making a decision, I think they need to have all the information they need before making a decision.
Great. And Basil, of course, through the 3 years of actually meeting with the regulators, what do you wish that they get their heads around in order to progress this faster than maybe other regions in the world?
So I would say that they have done it faster than other regions. 3 years sounds like a lot from the journey that we've went through, but for example, many parts of the world still do not have a framework to regulate crypto, blockchain projects, etc. There's only a handful around the world that do this. So I would say on a relative basis, they're fast, but there's always room for improvement, as with any kind of institution. I would say, if I were to ask for anything, it would be to be open-minded to new improvements in technology and to work with players like us on the panel here and out there as well in the audience and around the world to progress and upgrade our technology to stay ahead of the curve instead of settling and saying, okay, this is how it works and we stay like this forever.
Excellent. I absolutely agree that a lot of people think that may be a long time, but we've moved a very long distance in a very short time compared to other places. And I think the USA and China, being at either ends of the world, are also on different levels of the scale. They are acting and reacting in a very different way to where I believe us, being the center and the central hub of the world, have been able to enjoy a much faster decision-making process. So I want to ask you about, this is where I hope people in the audience might see themselves. Okay, so I'm going to go down to individuals and meetings that you've had. Like, give us an insight into your experiences. And I'll ask you about a meeting maybe where people have come to you and thanked you and said they've had the best experience of their life after a few months, or maybe more, and separately, what has been something that didn't go so well, and why? So from an institutional level, could you give us an example, Basil?
I can give you examples from both sides. So on an institutional level, one of the more important points is that we have regulatory authorization to do what we're doing. Typically, institutions have mandates. Those mandates govern how the institution must make investments and what types of counterparties that they're allowed to deal with legally. by their own investors. And by having these regulatory licenses in place and the ability to track the way they allocate their portfolios and provide with them the controls and security that they need, they're always very thankful that they can now enter the space, enter crypto, enter blockchain within a framework that works for them, within their risk profile. And that's a very important part where at least our institutions are very grateful they can now access the market, which previously they couldn't. On an individual level, I think it's similar. We provide a low-risk place for them to onboard and start their own journey into crypto investing, crypto trading, which provides them comfort that we're always there to help. We're always there to make sure that their investments are held in a safe way and that there's always someone to talk to on the other side, which is not always the case, especially in unregulated markets. Where things have gone wrong or where we've kind of been challenged is actually adjusting from unregulated to regulated on the individual level. So we've actually had an individual, and I say this quite funny, is that they went through our questionnaire to onboard, which is a little bit more rigorous than some of our unregulated counterparts. And I've had someone say, hey, you're asking more questions than my wife did before she got engaged to me. What is this? I'm like, well, this is the law. I've got to do it.
Yeah. And that actually lends itself towards KYC, know your customer. It's as serious as having a bank account. It isn't much different than that. In fact, maybe you go through a more rigorous, even slightly more rigorous than a normal bank account would. It would have to be an institutional level account, correct?
So it's similar to a bank account. Actually, it's almost the same. I would say where we add a new layer in the process is when we receive cryptocurrency. So in receiving cryptocurrency, I think most of the audience is probably familiar that blockchain were able to trace the history of transactions on a particular coin, whereas with cash, you couldn't really do that. You could only know where it was coming from. And that's created kind of a new dynamic in terms of utilizing some very interesting technology to understand the risks of, for example, a Bitcoin coming in to our exchange. We understand, for example, maybe if it perhaps had been used in a bad activity or an activity that we deem as high risk and are uncomfortable with, or maybe it's fine. We now have this technology to understand, how far back in the chain it's been used for what, or at least on a risk-weighted level. Which is an interesting new dynamic that institutions are thinking about and that helps them get comfort on what they're investing in at the end of the day.
Yeah, anybody who's a fan of Hollywood movies will know when the FBI wants to track a dollar and there's a serial number on the dollar. I think it's easier to track a Bitcoin because the number that's on the Bitcoin shows its history all the way back to when it was actually initiated. So if there is something that needs to be investigated, it is absolutely public where that Bitcoin has been through. And this is something that a lot of people, again, the narrative in a lot of the media says that people can hide money. It's once you know the entity, you can find out where their money is, literally down to the last digit. Now I go back to the same question, but with regards to individuals, and whether it's high net worth individuals or people who want to invest. For you, what are the two types? Something that was extremely positive, somebody came to thank you, and somebody who came and said, Saeed, what are you doing? Why is this happening?
Yeah, so in both cases, it's been either a family member or a friend or somebody in my network. And I do get a lot of people who ask me, you've been in the industry for 5 years, you've been investing in this space for so many years. Can you tell us, how can we get in? What should we do? What should we invest in? And my answer to them is always, you have to have a minimum of 3 years investment horizon, and you shouldn't put more than what you're willing to lose in this asset class. It's very speculative, it's very risky. There's high risk, but it's high reward too. And I always make sure they understand that. And there's been 2 cases. One is where they've come in at kind of the peak of the previous cycle, and they've invested, and they've been unhappy because the market's been slowly and gradually going down, and they haven't been patient enough for the market to go back up. On another case, there's been some people that I've, brought into the market who've come in at the low, and they're very happy because they just happen to have the great timing and the market's been going up, and they're happy with that. But on the flip side, if the person who's been losing over the last couple of years has been patient, then they would see the upside that comes with the next market growth as well. So, but again, if somebody who's come in at the low and has been investing to the high, maybe they're happy in the first year they're in, but then when the market turns, then they won't be happy. But I always tell people, you have to have a long time investment horizon. You have to be aware that there's very high risk. It's still a very new technology. It's still an exploratory phase. And that's all I can do when I'm just telling people that I know of my experiences and what they should expect. Obviously, I'm not giving them any financial advice, and I tell them it's your decision at the end of the day. You have to think about it. You have to understand what you're doing, and then you'll be in safe hands.
Excellent. So really we're talking about the timeline. That's the big difference, is people who want a quick gain, this is not the market for them because it is a gamble in the short time frame. This is something that if you're looking into it, your general comment is be there for the long term. And so I'll use a little example that I've seen people, whether it's CEOs or people in finance, their eyes light up when I use this real example. It's online. Bitcoin has been around for 12.1 years. If you bought $1 of Bitcoin when it was released, the value of that $1 today would be $88 million. If you had put it when it was released, you'd have to be a nerd, somebody who was very into it, but that's how much it's risen by. If you put $1 into gold at the same time, today it would be worth $1.75. And the difference, I think, is in terms of adoption and in terms of timeline. So the first question I'll ask with regards to timeline is just, I'd love your insight into, we've had Bitcoin for 12 years. E-commerce took 20 years to get to where we are today. So 20 years is how long e-commerce, the Amazons of this world, took to get to where we are. Where do you think crypto will be in 5 years' time, bearing in mind that there's less than a 5% adoption rate by institutions? So given that timeline, 12 years of Bitcoin, given the kind of rise you've seen in that currency, where do you see us being in about 5 years' time? Saeed.
So I think we're at the stage of blockchain technology right now, where if you think back to the internet, and how you would connect to the internet when it was back in the dial-up modem days, and then it suddenly shifted to broadband and wireless and Wi-Fi and all of these wonderful, innovations in internet. So I think this is where we are right now with blockchain technology. There's a lot of blockchain networks. There's a lot of blockchains out there at the moment. They're still developing. They're still improving. There's still scalability issues, there's still security issues, there's still different issues that are being tackled by the developers of these blockchains. But I think in the next 5 to 10 years, it's going to be so advanced and there's going to be so much happening and so much you can do using blockchain technology that I think it's still very early stage at the moment. If you're asking me about cryptocurrencies as one use case of blockchain technology, the current market cap in total of all cryptocurrencies out there is $2.5 trillion after the latest downturn in the market. But I think in 5 years, I can see Bitcoin being $1 million. I can see the market cap growing by 10 to 20x from here. It's a question of when and not if for me.
Could I press you? You said cryptocurrencies as one aspect. What other aspects are there?
So you have, for example, all the hype at the moment, which is around NFT. NFT is one use case of blockchain technology. Gaming, play to earn, metaverse. Metaverse is the biggest buzzword at the moment. All these different parts of how you can use blockchain technology in a specific type of business or a specific industry. You can use blockchain technology in a lot of different industries now. It started off with Bitcoin, which was disrupting fiat currency, which is a traditional currency. And then it's evolved over time so that it touches on other verticals and industries like supply chain, decentralized finance, and so many other areas. So it's still evolving. There's still a lot of innovation that's coming out. There's gonna be a lot more use cases that come out with the technology.
Great, and I think you've re-emphasized the point that a 5-year horizon means that if you get in now, you'll learn a lot over the next 5 years, and you are in a place to benefit. The other point really would be it could go up as well as down, but that's the same as any company. So maybe diversification is the other part.
Diversification is key in any kind of investment you make. You have to diversify. You can't put all your eggs in one basket. But you're right about the volatility in the short term. There's definitely going to be volatility. You could be on the positive side of it. You could be on the negative side of it. But in the long term, I think it all evens out, and the trend is upwards in the long term.
And I think from a traditional investment standpoint, even property, just something that everybody knows, people may have experienced buying at a high and it goes low, but you hold it long enough, it goes back up. And I think people who have seen this cryptocurrency market have seen a very similar thing of you shouldn't look at the next year, but it should be, in property it's 5 to 7 years. And I think this is a very good measure. Would you say so?
Agreed. Yeah, minimum 3 years.
Minimum 3 years. And with Basil, the same question.
So I'm going to look at this with a couple of different kind of dimensions, but I'm going to stay focused specifically on the financial services sector, since that's where I spend 110% of my time, unfortunately. So in my view, blockchain has the potential to replace the piping of all capital markets to some extent, if regulated in the right ways. Now, I'm going to paint a picture of what the scope of this might look like, putting aside Bitcoin and the existing cryptocurrencies. Imagine a world kind of where you've got stocks, derivatives, bonds that are all done via token instead of through the traditional technologies that exist today, which are quite antiquated and old. So Saeed mentioned the market cap today is around 2.5. Let's compare this to the derivatives market cap globally. That's around 500 trillion. That exists today. These are financial assets. And let's look at a kind of a difference between individual versus institutional. In crypto today, there's about 10% institutional and about 90% individual. It is the inverse in the larger side of the market. So if you believe that institutions are going to find a way in, the market has tremendous room to grow, not just in terms of number of assets available, but also in terms of amount of capital being allocated. And in my view, I think we're just at the beginning here, mainly because the key issue to get institutions into this market is adequate controls and regulation for them to become comfortable within their mandates and within the legal frameworks that they operate in to actually get into the market. We're just at the beginning.
Can I ask you, from an international perspective, somebody sitting in Europe or in the US or in a fellow Arab country, can they invest through you?
Yes. So actually, Midchains being a free zone regulated company, we're allowed to cover clients, both institutional and individual, from about 150 different countries. So broad spectrum, we want to bring the world together when it comes to being able to invest. We don't have any capital gains taxes in our jurisdiction, so that's helpful for institutions and individuals alike. It's cool.
So you've done the hard work of actually getting the regulators to do the due diligence for you to actually be open for business globally here in Abu Dhabi.
Yes, that's right.
Amazing. And Saeed, with regards to your project, many of the projects you research and invest, what is the split, I'd say, between projects done outside of the UAE versus projects being done in the UAE? And what do you think will happen in the next couple of years?
So I think at the moment we've probably invested in around 35 projects, and I'd say 2 or 3 of them are UAE based, another 2 or 3 are regionally based, and then the rest of them are globally based. So it's a pretty even split across the globe. For us, what's most important is, the team that's behind the project, what the actual utility of the token that's behind the project is, Does it have long-term potential? Is it solving a problem? All of these questions are asked before, and we don't necessarily focus on where the project is coming from, rather what it's doing for people in their everyday lives, or what it's doing that's different to what's being offered as a product or service in the market at the moment. And we just want to explore as many different startups as possible across different blockchains, across different use cases, and we're always researching and analyzing projects. But obviously, I'm from here and I'm based here. Our COO is based in Abu Dhabi. Our CTO is based in Dubai. So we want to support the UAE ecosystem. And I think as more talent starts coming in, then there'll be more and more options for us to invest in. And I think you'll start to see there's more regional investment that we're doing.
I agree. I think this conference, Blockchain World, and conferences like it are an amazing draw for people from an international audience to understand that the UAE is at the forefront of what's happening in the crypto world. Thank you, Saeed, and thank you, Basil. If somebody wanted to get in touch with either of you, how can they find you?
You can find us online, find me on LinkedIn. I accept everybody, so I'm pretty easy to reach. Thank you all.
I'm on LinkedIn too, so please find me. Please reach out to me anytime. Thank you, everyone.
Thank you, everybody, for being here, and we move on to the next panel. Thank you, guys.